Breaking economic news, no scary data this Halloween for the markets. Wages, consumer spending, and the Fed's preferred inflation measure. First, let's go to wages. The quarterly read from the Employment Cost Index report. 3 months ago, the market thought there was no wage inflation and so no Fed tightening, as the employment cost data in the second quarter were reported as worker pay increase, the weakest on record. Weakest meant the smallest quarterly increase, 0.2%, on record back to 1982 when the index began. Big deal. This was a misleading characterization back then, as ECI wages were 2.1% year on year, and that is where wage gains are again today for the third quarter data. Wages and salaries up 2.1% year on year. 2% wages in the ECI report, the same as it ever was. This wage data won't stop the Fed from lifting off on December 16 if unemployment falls a little bit more. What else? Real consumer expenditures for September up 0.2% in September after rising a strong 0.4% in August. This news on consumer purchases was reported as quarterly changes yesterday in the real GDP report. GDP may have been just 1.5% in the third quarter, but real consumer spending was 3.2%, which counts as strong. The importance of this report today is we see how consumption went out at the end of the quarter to gauge if there is any momentum to power consumer purchases forward into the fourth quarter of the year. The news here is good, as real consumer spending grows 1% in the fourth quarter, even if households do not spend another dime in October, November, and December. Finally, the Fed's preferred inflation measure is out, the personal consumption expenditures deflator. What a mouthful. PCE inflation for short. This inflation count always finds less inflation than CPI inflation, as basically healthcare is measured differently. We prefer CPI inflation, as more employer wages and Social Security benefits are indexed to CPI inflation. Anyway, core PCE inflation was just 0.1% for the month of September and 1.3% year on year. Core CPI higher at 1.9%. Net, there's not a lot to be afraid of in the latest batch of economic data. There's nothing in today's reports that stops a Fed liftoff on December 16. The Employment Cost Index measure of wages and benefits paid to workers is up 0.6% in the third quarter and rising 2% from last year. PCE inflation fell 0.1% in September due to energy prices and is up just 0.2% year on year. Low today, but not tomorrow. Headline PCE inflation will rise up to the core inflation level of 1.3% early next year, when the $100 to $40 oil price decline washes out of the year-on-year data. Consumers are alive and well with two strong 3% plus quarters under their belts. The Fed remains on track to raise rates in December. Nothing released today stops them dead in their tracks. So if you are a saver, your long zero rates nightmare is almost over. The economy remains better than the market thinks.